of August. Let's get the briefing underway. I thought I'd have a bit of a recap from yesterday, and then just given really a lack of real big news from overnight. Obviously a lot of people awaiting Jackson Hole Symposium to kick off. It's going to commence from this evening, running through into Friday is really the key day. That's when we're going to hear from the keynote speech from Janet Yellen. That'll be at 3 p.m. tomorrow afternoon, and then Mario Draghi, I believe, is speaking much later into the evening. But before we get to there, let's just have a quick recap of yesterday. Obviously in the European session, it was a pretty good day in terms of economic data. We were awaiting Mario Draghi, but actually that turned into being what was a non-event. He didn't really say anything, but around that same time, pretty early on in the session yesterday, you had the French, in particular, manufacturing PMI data. If I remember correctly, it was a 6.5-year high. The German reading was a 2-month high. So particularly strong data, obviously just, if anything, further validates this ECB path towards potentially Draghi tomorrow outlaying further details to this policy tightening process going forward. So the euro surged higher, pretty good day overall, and then we're still sitting up, maintaining a 118 handle. So it's still about 30-40 pips above where we were trading before that data came out yesterday. Equity markets certainly not as convinced because obviously from a policy play, this has a different connotation. If they're going to be tightening policy, this has been typically met in a negative fashion for European equities, much in a similar vein is in US equities if the Fed were to get too overtly hawkish. But certainly elsewhere, we'll be keeping an eye on these comments from Jackson Hole with particular interest, and they will definitely be something we'll be going over thoroughly in tomorrow's session. Looking broadly though at the charts and setup this morning, it really does reflect the importance of those speeches, because we're basically flat in the equity future space, pretty similar to the currency market. In terms of cable, that's basically unchanged. Euro dollar's a little bit lower, sitting at pivot, so maybe just a little bit of profit taking from the move yesterday. And a trade that I was just saying, well done to Edward in live room this morning. I believe his trade was, you had that kind of double bottom, if you like, test in the overnight early Asia Pacific session. Well, this would have been the day before, I guess, and then very early yesterday. A break of that and around S1, managed to get the short carrying it through down towards S2 this morning. So that was maybe one trade that's been apparent this morning, but otherwise markets generally are quite quiet, and barring anything unexpected, I probably suggest that may remain the case. In terms of the close on Wall Street yesterday, we were down 0.3% in the S&P. Nasdaq was down 0.4%, as was the Dow Jones, so actually a negative day. What was the reason for the negativity? Well, as you guys know, the latest threat from Donald Trump, vowing to shut down the government, just looking to leverage the timeline with the approaching debt ceiling in the US, pushing Congress to get funding to build the border wall, in addition to talk about ending NAFTA. So, coming back to more domestic issues, but certainly adding some negative sentiment to the mix, which meant that Asia overall was a fairly indecisive tone. Talking of the debt ceiling in the US, to give you a bit of context as to timing, the federal government has until sometime between late September and mid-October in order to avoid a technical default by essentially raising the debt ceiling. Don't forget, they are on recess, so analysts at Deutsche Bank note a good point. They say there's plenty of room to run in terms of this story until Congress returns to Washington in early September. So again, this is more about political positioning at this point. You would think that these talks will start to intensify as we get to September, but quite interested to hear the comments out of Paul Ryan last night, who basically said that there's no way we should be threatening shutting down the government on this particular issue. So again, seems Trump out there on his own with this particular view at this present point in time. Having a look at oil, and really because of the real lack of news flow from overnight, I really want to focus on oil, and there's a couple of things I want to show you and I want to talk about. But before I get into the thick of it, let's just have a look at yesterday's price action. You can see here really strong move to the upside, and of course we had the Department of Energy's crude oil inventories. Now obviously looking at this on a half an hour candlestick, it looks like a fairly straightforward move, pretty strong to the upside. We moved from around 47.75 all the way up to almost an 80-cent gain or so. Put it on a minute chart, and obviously it doesn't look so simple. And certainly this is one of the things we talked about yesterday. I wanted the new interns to trade this event to get a bit of a feel about the type of volatility around this type of release, which is obviously multifaceted, given that we're trying to monitor a series of different figures to then digest all of that to have an overall outcome to how the market sees the report, whether it being bullish or bearish or net neutral. And as you can see here, that initial reaction, you've got a range of pretty much 48 down to 47.60. So you're talking about pretty much a 40-cent range of just volatility over that point. Very difficult more often or not to trade this release at that point. But thereafter, usually, I mean, these are minute candlesticks now we're looking at. You can see that in the minutes thereafter, on the 5th minute, and then later, once it came back down again, then about the 11th minute, we started to see then the full push up to R1. This is quite often what happens. This is the market kind of goes through the details of the report. So let me just recap what these numbers were. Remember, the APIs come out the night before, and they act then as our reference point for what the market will be looking at. And although this was a sizable drawdown, it was in fact in line with what the market expectation was. So it wasn't actually the crude number that we were so much interested in. In particular, it was the gasoline number, because this was the 3rd consecutive weeks of builds, and it was distinctly against market expectations, i.e. much more bearish, a build against expectations of a drawdown. So when the DOEs came out, we were putting quite a high level of importance assigned to the gasoline figure. The crude figure came in pretty much as we were anticipating, i.e. very similar to the APIs. The gasoline number, though, was a complete reversal of what we had in the APIs, i.e. we were kind of positioned for a bearish outcome, and instead we got the complete opposite. So that's kind of neutral, the headline, but then gasoline was certainly a bullish factor. You then had the US output figure. If I remember correctly, that was up 0.287%, and that is obviously on its own a bearish situation, i.e. output's going higher, but it comes after a week prior where output was up nearly 0.9%, so certainly not as bearish as the prior week. So again, the gasoline took precedence, and the market actually decided in the end to see a pretty decent push up on the upside, and it actually went, after going through R1, went through the prior day's high at 48.21, and actually ended up being a pretty decent move, and we've held on to those gains. Now, why have we held on to those gains? And this is really what I want to talk about this morning, is the weather. I'm not talking about the pretty dismal August that we're having in Britain. I'm talking about the weather in the Gulf Coast in the US. These are the type of headlines that you're reading this morning. Traders are on the watch of the Gulf of Mexico storm. So let's have a look at this, and I'll give you a bit of a breakdown of how I'd monitor this type of situation. First port of call when I hear this type of headline is I go to the National Hurricane Center. So this is essentially your hub for all things in real-time, latest updates as to tracking these type of weather patterns that certainly could have a severe ramifications for the market. To give you an idea, the US Gulf of Mexico, So this is what we're looking at here. This is Tropical Storm Harvey that you can see in the left, defined by that red icon. The US Gulf of Mexico is home to about 17% of the nation's crude output and 5% of dry natural gas output. That's according to the Energy Information Administration. You probably know them as the EIA. And more than 45% of the nation in the US, their refining capacity is along the US Gulf Coast. So what we're looking at here is a serious rain event or heavy winds could disrupt oil and gas production as companies then already start to evacuate platforms in the Gulf as refiners on the coast face potential flooding. So obviously if all employees are evacuated for their own safety, then they become non-operational. So there's no output coming out, no refining taking place. Now in particular, to give you an idea of the sort of names of the biggest facilities that you should be listening out for, Corpus Christi, that's where the storm is projected to first hit, is a major oil and gas refining and export hub. You've then got Valero Corp's Flint Hills Resources, Citgo Petroleum together have about 750,000 barrels per day of refining capacity in the region. Now, so this is Harvey, and we're going to focus on Harvey in a bit more detail shortly. But if you look at this, you've also got an X here on this map. So what this is looking at here is the current formations, and then those that are essentially could turn into something with more force in terms of a weather pattern. So this here defines essentially a trough of low pressure which is creating disorganized showers and thunderstorms across the Bahamas and southern Florida. However, there is a risk that this could further intensify into formation into then a tropical storm and so on and so forth. At this point, they're assigning the chance of a cyclone formation in 48 hours at 10%. Again, I point these out because these are things in which oil traders will be factoring in. What's the probability that a weather formation at the moment in these particular geographical important areas for the production and refining process of the majority of US production have the ability to affect that area? Okay, so this is Harvey. We click on Harvey. What we get here is this. This means then we can start to project the path of which the tropical storm is moving. Now, I can add on things like forecast tracker lines and so forth, but essentially this is where we are at the moment. Well, this was as of 1 AM Thursday. So actually how the National Hurricane Center works is that they have, if I quickly flick back here, if you scroll down, they essentially publish updates every couple of hours on the current monitoring of these patterns. So if I click on this, obviously I can start to then see over what time frame do they anticipate it will hit then this key area. This is the key area where the cluster of activity for crude production takes place. And you can see this storm is projected to hit right in the heart of that by coming up to Saturday afternoon. So coming up Friday evening, Saturday afternoon, that's when it's going to hit. But before that, this is when actual oil refiners will already be monitoring the same thing, and they will commence then evacuations pretty much from now in order to safeguard personnel. Take this one step further. This is now the EIA website, and I want to show you this particular graphic. It's a pretty neat interactive map. So going to get a little bit geeky. But what I'm looking at here is the path of which Harvey has moved, the projected path, overlaid with oil wells, gas wells, and platform facilities within the Gulf of Mexico. Then I can start identifying exactly what is the projections for which specific facilities will be affected, i.e. the ones I've just mentioned, Corpus Christi, Flint Hills, for example. They are by far the largest. I want to know whether they're going to get impacted. So what I do, I start zooming in here on this map, and it's pretty detailed, so it takes a bit of time to update. And essentially this is where we are at the moment. So this is looking at the same but more detailed from that previous graphic we were looking at. Now all of these little brown dots that you can see here, you're probably wondering, what is that? Now if I zoom in, you'll probably get a better idea. Each one of these dots, so if I just select one, that is an oil well. That's an actual physical real life oil well in the Gulf Coast offshore basin. If I hit the blue one, that's a gas well, same thing. If I click the shadow without a defined circle, so this one for example, that is, if that will come up, that's an active platform. So the platform that you kind of see in photographs when you talk about energy refining and those platforms that you see, these are offshore platforms. So if you start to look at this, you can see all these clusters of dots. So these are mixes of wells and platforms, oil and gas. If I zoom out, look how many there are. There is a phenomenal amount. Now Louisiana is obviously infamous with oil, because within Louisiana you have key hubs like Baton Rouge, Lake Charles, the Beaumont refinery, which you've probably heard many times before, the likes of ExxonMobil. That's not, though, exactly where this storm is going to hit. This storm is going to hit around this yellow line. This is the center of where the storm is hitting. So the offshore facilities appear to be a little bit more out of the action, but the onshore facilities right on the coastline, and particularly Corpus Christi, that's right here that you're looking at. Corpus Christi is really the epicenter of the coastline in terms of productivity. So one thing to keep in mind then is that aside from monitoring things like OPEC comments and what they're going to do next and so on and so forth, you have to take into account these forecast weather patterns when they get to the point of development into a situation which it can actually start to affect production values. Because remember, the market is forward-looking, i.e. the current price is based on future expectations. Future expectations is, as we've just seen, that this storm, which is quite comfortably sitting well offshore and nowhere near the facilities at the moment, will inevitably hit the heartland of US oil production and its refining facilities. As such, I would definitely be keeping this in mind when trading crude oil, and in fact it might explain a bit of a reason why we've held on to the bulk of the gain of which we saw from yesterday afternoon, because this storm is getting closer and continuing to remain on track to hit that key area. So just having a look here, as I'm speaking, we've clawed back into flat territory. Obviously you've got that high that we printed, this would have been 2 days ago. You can see that provided a bit of a floor after that initial push high yesterday. It could be an interesting level just to keep an eye on if we move back any lower, but you can see crude already moving onto the upside. Just checking the news wires, I have just seen here a comment come down. OPEC plans to invite Nigeria and Libya to monitoring committee. OPEC to hold next monitoring committee meeting, we know this, in the end of September, September 22nd. OPEC says all options for cuts, including extensions, are on the table. So there you go, that's your last little pop there in oil. So just to repeat, there's a scheduled committee meeting. What they've said here is that they're going to bring Nigeria and Libya to the table, and all options for cuts, including an extension, are on the table. So again, this is a little bit of a elevation of the chatter around OPEC looking to do more. So this, with the weather, I would say fundamentally it's starting to stack up to be quite a few bullish forces at play here. That with the gasoline situation from yesterday, which elevated the prices initially, so it could be best to look for an ideal point for the long, looking at the fundamentals. So now it's just about technically identifying a point of entry. Okay, hopefully you found that interesting in terms of the National Hurricane Center. So really, just to recap, the two main websites that I would typically use very regularly on these situations is the National Hurricane Center, and then the EIA, the EIA Excellent Hub for all things to do with energy products. Okay, just wrapping up, look at the calendar for today. This morning, actually, 9:30, there is some key economic data coming out. This is the second release of UK GDP. Excuse me, UK GDP. We're not actually expecting any changes from the advanced reading, that meaning that essentially the quarter-on-quarter reading remains at 0.3%, the year-on-year at 1.7%. Business investment could be quite interesting to keep an eye on. This is the preliminary business investment figure for the what they've got measured here for Q2. It would have been interesting to just see whether any of that starts to let up, given what we had with the triggering of Article 50 and the kind of lack of clarity on the Brexit situation at this present point. Looking further forward into the afternoon, you've got the weekly jobless claims, as per usual, coming out of the US. Building permits, but there are denotes that these are revisions, so lesser important. Existing home sales are just following on from the new home sales report we had from yesterday. So overall, fairly quiet calendar, and again with much of the markets in wait and see mode for Jackson Hole, which today not so much focus because it doesn't really commence until this evening. And then tomorrow's the big one when we get Janet Yellen at 3 o'clock, and then Mario Draghi late into Friday evening. Okay, guys, gonna leave it at that. Actually, I've just quickly clicked on Michael. Quite kindly has sent, and Michael is one of our traders in the live room. I know he definitely focuses on commodity products like gold and oil. And this is also a website which he's just put in the chat room that he recommends. I've not seen this before, but certainly the link is in the chat room. Please feel free to have a look around. Okay, guys, that's it. Gonna leave you at that. Have a good session. Any questions, just fire them in the chat. Happy to help as usual. Thank you very much.